Welcome back to Eric's Ask a Realtor series. Thanks for joining me. Today, we're going to cover some hidden costs associated with buying a home and owning a home over the long term. So let's dive in. First of all, when you start shopping for a home, you talk to a lender, you get approved for a loan, and then the fun begins. You start shopping, and eventually you find that one and you get it under contract. And that's when these additional expenses start occurring. So first off, there's an inspection fee. When you're buying, a $500,000 house, it's worthwhile to get it inspected. Maybe you're a handy person, you want to do it yourself. I still recommend hiring a professional inspector and having them deep dive into the home. An inspection is going to cost you anywhere between $300 and $600, depending on how many different things you do. They're going to go through, they're going to make a huge report for you to review, and me as your realtor, I'm also going to review it. But some additional things you can add on with an inspection is a sewer scope. If you're buying an older home, that's advisable to make sure the sewer's in good condition. Maybe a meth test, that's always a great idea because that's not something you can necessarily see. Maybe a mold test, not usually in Utah, but in other states, a termite. We want to look for evidence of termites. So there's a lot of things you can add on to an inspection, and it's worth getting an inspection done. Next up, when you're under contract on a home, you're also going to have earnest money due. So earnest money is kind of that deposit that you put down to show the seller that you're serious, and that if you don't perform after certain deadlines, they actually get to retain that earnest money. It's my job as your realtor to make sure that earnest money is protected at all times. So as we're going through the process, I'm going to tell you, hey, your earnest money is still protected, or hey, we're about to go past a deadline where your earnest money becomes non-refundable. And that earnest money can be anywhere between, $500 up to however much you want. Typically, the more earnest money that you show, like if you're competing with two different offers, it's better to have higher earnest money than lower earnest money. I usually recommend, $3,000 to $5,000. The good thing about earnest money is that becomes part of your down payment. So that's just not money lost or given out. That goes towards your down payment and eventually to your closing statement. Next up, home appraisal. So you're gonna eventually have a finance and appraisal deadline, and the lender needs to get an appraisal done, the bank does, to make sure the home is worth what you're paying for it. That appraisal is probably going to be around $500 also, and you're going to pay for that. The appraiser can come out, verify that the value's there, run comparables, etc., to make sure you're getting a fair value for the house. Next up, loan origination fee. So this can vary a lot lender by lender. Typically, it might be 0.5%, maybe 1% of your loan amount. This is what they charge for, setting up the loan, originating the loan. And if you find a lender that doesn't have much of an origination fee, then it might be worthwhile deep diving into what their interest rate is. Sometimes rather than paying the fee up front, they charge it an interest, and maybe that can cost you more over the long run. Next up, property taxes. If you're getting a loan for your home, your property taxes are going to be collected with your monthly payment in an escrow account. So the lender sets up and manages an escrow account for you to collect that. So like I mentioned in other videos, you have your principal, you have your interest, and then you have your escrow account, which includes taxes and insurance typically. And it can also include, mortgage insurance, homeowners insurance, things like that. But that escrow account is going to have those property taxes. So you're going to see them there. And at the end of the year, when you get the statement from your county, you're not going to pay them. The lender's going to pay those for you. Once your home's paid off, that's when you might be paying your own property taxes. Next, school taxes. You don't see that everywhere, but different counties, different states collect things in different ways. So it's not something we see a lot here in Utah, but it's still something to be aware of. One thing that you got to think about is moving costs. Oftentimes you're going to need help moving. Maybe you got all your friends, but once people are 40, 50 years old, they don't want to help you move for pizza and Coke. So it's just a better idea to hire some people, hire a moving company to help. And that's going to be an additional cost, $1,000, $2,000, and it's going to be a better day for you. I guarantee it. Other things that can be in closing costs, homeowners insurance. You're going to need homeowners insurance. Sometimes they collect that for the first year. Mortgage points. If you buy down your rate, they're going to collect that as a fee. So it's basically you're buying down your interest rate for the long term, and they collect that fee up front in your closing costs. There might be a title search. That's a title fee that comes in to play. The title company that you hire wants to make sure that the home is clear of encumbrances or issues, so they do a title search. That's going to be a fee you pay. Another one that can happen is an HOA transfer fee. A lot of times if you're moving in an HOA, they might charge a flat fee or a percentage fee. I've seen it either way. Sometimes it's 0.5% of the purchase price. Sometimes it's a flat fee of $450, but they're going to collect that at closing also. And the interesting thing about the HOA fees and the transfer fees is in the contract, you can state in the real estate purchase contract, we can state who's going to pay that. So if I'm representing a buyer, I always ask the seller to pay for it, because then it's less money out of your your pocket. If I'm representing a seller, I try and switch it around so the buyer pays for it, but it can go either way. So that's a fee that's going to be on that closing statement also that you're going to have to pay if it's in the contract that way. Another fee could actually be a home warranty. If you want a home warranty for the first year, you're not familiar with the house as a buyer, so having some kind of like insurance coverage can be beneficial. When I represent a buyer, I ask the seller to pay for a home warranty for the buyer. It gives a little bit of peace of mind, so if something breaks that first year, rather than paying $2,000 for a new water heater, maybe you're paying just a deductible because that home warranty covers everything. So those are the big fees that I can think about when it comes to closing costs. Obviously, review your closing statement, your closing disclosure from your lender. It's going to outline everything. If you have questions about your specific situation, feel free to schedule a call with me at the link below. Thanks.